In early May 2025, Palantir reported blistering first-quarter results that left Wall Street analysts scrambling for superlatives. Revenue jumped 39% year-over-year to $884 million, handily topping consensus estimates and marking a 7% sequential increase from Q4 2024, proof that demand for Palantir's AI-driven analytics is not slowing down anytime soon. Behind the scenes, Palantir's U.S. business was the star of the show, with U.S. revenue up 55% YOY to $628 million, and its U.S. commercial segment surging 71% YOY to $255 million, enough to make any retail investor do a double-take. CEO Alex Karp cheered the ferocious demand for the company's AI platform, noting that every major vertical, from healthcare to manufacturing, is clamoring for Palantir's data magic wand. Why investors loved it, even if the stock took a breather, beating expectations. Palantir's Q1 results smashed forecasts, prompting a full-year revenue guidance raise to 36% to 37% growth in 2025. Cash flow machine. Free cash flow clocked in at $370 million, a 42% margin, giving the company plenty of ammo to reinvest in R&D or tuck in exciting startups. Enterprise stickiness, with 139 deals over $1 million and 51 deals over $5 million in the quarter. Palantir's pipeline is as plugged in as a Times Square billboard. Even if the stock dipped briefly, profit takers unloading after the blowout print, long-term holders know these numbers are the economic equivalent of liposuction, they trim the fat from. Uncertainty and supercharge investor confidence. Ownership breakdown, who's holding the bag? Ever wonder who's behind Palantir's meteoric ascent? Believe it or not, 49.13% of Palantir shares are in the hands of public companies and individual investors, a testament to the cult-like following Alex Karp's crew has cultivated. Institutional investors, mutual funds, pension plans, hedge funds, account for another chunk, while 4.97% is owned by insiders, including the usual suspects. Peter Thiel, Stephen Cohen, and Karp himself. Why does that matter? Retail and corporate holders often react differently to market jitters compared to institutions. When retail bulls lean in together, they tend to hold the line, and share meme-filled pep talks on Reddit. Meanwhile, corporate treasuries view Palantir as a strategic partner, not just a ticker symbol. That combination creates a resilient shareholder base that's both passionate and pragmatic. The SAP partnership, cloud migration gets a Palantir twist. On May 20, 2025, SAP dropped a bombshell, a strategic partnership with Palantir to facilitate joint customers' cloud migration journeys and modernization programs. Here's the elevator pitch: RISE with SAP plus Palantir Foundry or AIP. Customers can lift and shift their legacy ERP systems into the cloud, then sprinkle in AI-powered analytics from Palantir. Think of it as jet fuel for your digital transformation rocket. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. Seamless connectivity. Palantir's pipelines link directly into SAP Business Data Cloud, forging a harmonized data foundation across every enterprise silo. Federated security, with SAP NS2's DoD-grade compliance, FedRAMP, ITAR, impact levels. Palantir's AI tools can dance in the most locked-down environments without stepping on any classified toes. This marriage could be a game-changer. Imagine a global manufacturer migrating its on-prem SAP ECC instance to the cloud, then using Palantir to instantly analyze procurement, production, and logistics data in real time, forecasting supply chain bottlenecks days before they happen. That kind of synergy isn't just sexy PowerPoint fodder, it's the blueprint for next-gen enterprise operations. Building the Business Data Cloud platform. With SAP's Business Data Cloud as the backbone, Palantir has a golden opportunity to build out a unified business data cloud platform that transcends traditional analytics. Here's the vision: data unification, all SAP and third-party data streams flow into a single lake, normalized and cataloged by Palantir's metadata engine. AI-driven workflows, pre-built, industry-specific modules, like predictive maintenance for utilities or fraud detection for banks, activate with one click. Natural language insights. A future Foundry enhancement could let users ask plain English questions. Why did Q2 margins dip in EMEA? And receive annotated dashboards in response. If executed well, this platform could rewrite the rulebook on enterprise data management, paving the way for Palantir to leap from niche defense contractor to core business operations vendor. Think of it as going from selling rocket engines, Gotham, to running entire space missions, Foundry plus SAP. Before you break out the party hats, let's unpack that wild number, current price versus target. A $1,375 share price implies roughly 12 times upside from a mid-$100s trading level, revenue run rate. To justify that valuation, Palantir would need to grow 2028 revenue north of $30 billion. A gargantuan leap from its current $3.9 billion guidance. Margin expansion. Operating margins would have to surge into the 50% range, driven by SaaS-like scale. Realistically, such a trajectory would require near-perfect execution across every front. Commercial expansion, government renewals, platform upgrades, and minimal competition. It's imaginative to dream, but most forecasters, like Wedbush, Bank of America, and 247, Wall Street, hover in the $120 to $150 ballpark for one-year targets. But beyond 1 year or decades, we could possibly expect Palantir to hit that high target. Balancing the hype, risks to watch. Every high-octane story has its speed bumps. Here are a few areas investors should keep an eye on. Execution complexity. Integrating two enterprise behemoths is no small feat. Delays or teething issues could temper initial enthusiasm. Competitive pressures. Cloud giants, AWS, Azure, Google, and specialized analytic startups aren't standing still. They're racing to bundle AI features into their own ERP plus analytics stacks. Valuation volatility. At 200 times forward earnings, Palantir trades in rarefied air. Any stumble in growth or margin expansion could spark a swift re-rating. Regulatory headwinds. Governments worldwide are tightening AI governance and data privacy rules. Palantir's defense pedigree may invite extra scrutiny in some markets. In other words, it's a thrilling ride, but buckle up for possible turbulence, from a 39% surge in Q1 revenue to a near 50% stake held by eager public and retail investors. Palantir's story in 2025 is one of unrelenting momentum. The $884 million that flowed through its coffers in Q1 proves there's robust demand for high-powered AI analytics, and the SAP partnership offers a tantalizing glimpse of a broader, perhaps transformative, commercial horizon. Behind every data-driven juggernaut is a crew of visionary captains, and Palantir's isn't short on star power. CEO Alex Karp remains the company's charismatic frontman, often seen donning a t-shirt and blazer combo at industry events, spreading the news of human-machine symbiosis. Meanwhile, co-founder Peter Thiel brings his contrarian playbook and deep-pocketed network, ensuring Palantir always has runway for the next bold initiative. Throw in CFO Shyam Sankar, whose tightrope walk of aggressive R&D spending and disciplined cash flow management keeps Wall Street both thrilled and slightly on edge, and you've got a leadership trio that balances big-picture zeal with bottom-line savvy. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.